Let's take a look, though, at the markets right now, because, boy, have we been on a nice little run here. Jay Woods, Freedom Capital Markets Chief Global Strategist. Does the run continue, is the question. Has the train left the station? You need to be on the train? Are you supposed to jump off the train now that we've gone a couple miles? What do we do?
I think the train is just leaving the station. I mean, we're streaking right now. Dow up 8 days in a row. You know, that's happened only 15 times since 1987. 12 of those 14 times we've been higher a year later. And then if you go back to my career since 92, 9 out of 9 times that we've had an 8-day winning streak, we've been up 3 months higher, 6 months higher, 12 months higher. And then if you look at it from a technical point of view, as a technician, that's what I do, we just broke out. The Dow's breaking out, the transports are breaking out, so old Dow theory kicking in. It has been a story of the Magnificent Seven, but that story is changing, and I think it's not too late to jump in.
And is the idea that you're supposed to rotate out of the Magnificent? I didn't call them the Big Seven. I haven't heard the Magnificent Seven, but let's call. I will go with
we've
that.
been calling them that. Yeah.
The Magnificent Seven.
Yeah.
Okay, let's go. So the Magnificent Seven. Are you supposed to basically sell your Magnificent Seven and go into the Russell 2000? Is that the move, or is the idea you need to keep riding the Magnificent Seven?
Well, of those 7, I would hold those long-term mostly. I mean, if you look at Microsoft, Apple, and NVIDIA, those are 3 names you want to hold on to. But what we're seeing is a rotation. These stocks have had a tremendous run. Doesn't mean it's over, but what has been lagging? The Russell 2000s, the small caps, the mid caps, they're starting to catch a bid. The Russell 2000 will be a headline next week as we get there. It's starting to break out. And what investors are doing, they're rotating their money into stocks that have been beaten down. They've been lagging, and we're seeing it in some of the price action in the financials that actually missed earnings, like a Goldman and a PNC, that gapped lower, filled the gap, and now are trading higher. Goldman above a 200-day moving average. PNC, which was not a
Do you think this is just a melt-up for everybody?
Melt up's a strong word. I mean, on this 8-day winning streak, the Dow's only up 4.2%. On average, when we've had these 8-day winning streaks, it's 5%. So I don't think it's euphoric or anything like that. I think this is just the beginning of that continued rotation that we're seeing in the market.
What's the one thing that would keep you up at night to think this is not real?
One thing to keep me up at night to think it's not real? I mean, the Fed. Let's see what they say next week. The pause, I think, was done at the right time. Numbers are cooling. Yes, we still have that resilient labor market, which is fine. But if they get very hawkish still in tone, that would kind of catch us by surprise. I think this quarter point will be it for the end of the year. I'm very curious to see how they narrate the tone going forward.
If there were 2 quarter points by the end of the year, what would happen?
Well, I think the market already had that figured out because they telegraphed 2 quarter points.
Right.
And,
but now you just said that you think there's one and nobody's believing that there's a second.
Well, yeah.
And that's my point.
Exactly right, because we have come to this point where we have broken out. We are making that run. We're looking back.
But don't you think the run unto itself says to Jay Powell, hey, maybe I need to calm things down again?
Well, we'll see at Jackson Hole. That's exactly what happened last year. I believe it was August 14th when he usually comes out to this nice bucolic setting. He was in a bunker last year, and the market had a tremendous run, and he kind of threw water on that. Let's see what they say at Jackson Hole, because that could be the tell going forward to the end of the year. We do have headwinds. Seasonal headwinds are not going to just keep propelling us higher. There will be a chop here, but we're off to a good start in earnings season with financials. The price action is positive, and now with the breakouts we're seeing, watch materials, they could be next. They're on the verge. This is good, healthy rotation.
What do technicals tell you about the bond industry?
The bond industry, well, the 2s and the 10s, we were watching the 4 and 5% level in those. They failed, so we see double tops there. I'd like to see the pullback a little more dramatic, but it's okay. But what I'm watching is the dollar. The dollar is starting to break down. The dollar was the story in 2022. And as the dollar rose, you know, we got hurt. And what got hurt? The tech names. Well, now the dollar's weakening. Looks like it's breaking down. And tech, staples, communications, and even materials could benefit from that.
You do technicals on crypto?
I do, but I'm not a big crypto guy.
So you don't want to weigh in on where Bitcoin is, 30,000 bucks?
Yeah, 30,000 is a key level. We'll see where it goes. I dabble a little bit, just learn by doing, so I'm in it. But no, we don't focus on crypto.
Okay.